Hey guys, I hope you're having a great day. Today we'll be taking a look at a few chart analysis for the week ahead. So before we get started, I just want to let you know that our academy is live. So we partnered with Udemy and we've been able to launch our first course talking about forex. So if you're interested in learning how to trade forex or getting the most out of every forex techniques or trading strategies you already know, then this course is for you. So you're going to learn about price action, market structure, how to trade breakouts, how to trade divergence, how to use indicators. You're going to learn a bunch of stuff, okay, in a sophisticated way if you're already an experienced trader. But if you're not experienced, the academy also covers the basics of trading. So we're going to teach you how to trade forex right from the basics down to the advanced level. So that's out. So I want you to check it out. If it's something you're interested in, then you should enroll for that course. And I'm going to drop all the links in the description below. Okay, so that's it for that. Let's get started. As usual, we'll be starting with gold. So this is the gold chart on the 4 hours time frame. So this is kind of like a crazy chart right now because gold has been grinding slowly upwards. Okay, so we've just been chopping. So there's not been any significant price movement or price action to help us determine the direction of the market. Obviously, from what we're seeing right now, the market is heading upwards, but we need this price making higher highs and higher lows for us to be able to develop trade opportunities. But what we can see on gold right now, we can simply see choppy movements to the upside without any good opportunities to jump in on the trade. So I'm going to go down to the 1 hour time frame. So personally, I wouldn't be going long because there's simply just no opportunity to jump into a trade right now. Okay, I know you might think this is a bullish trend and this seems like a breakout and a consolidation above these price levels, but in my opinion, I wouldn't be jumping into a trade at this price level. I'm going to show you why very quick. So I'm going to pull up the moving average. Okay, so the moving average indicator, this is the 20-day moving average indicator, and what you can see is that price has used this moving average as a support level in the past. So within the last few months, so you can see at this price level we can see multiple bounces off the 20-day moving average, which also aligns with this trend line that forms this ascending triangle. So I'm going to get rid of these lines. So what you see right now is that we haven't come close to this moving average in a while, right? And there's a good chance price might be might come back to this moving average for a retest before we head higher. So right now there's just too much space between the current price levels and the moving average. That's why I wouldn't be jumping into any trade on gold right now. Instead, I'm going to try to see if we get a correction. Okay, so a huge correction, something like this. So if we could get a huge correction like this, so let's see, we grind slowly to the downside and get some sort of consolidation before we move higher. So this would be a very good scenario for me to go long. Why? Because we would have retested this moving average since we've retested it in the past. So the space or the distance between the moving average right now and the current price level is just too wide for me to take advantage of this bullish momentum on gold. So alternatively, if we could get something significant like a good swing movement, okay, creating a very good resistance level and then a breakout, so this will also be another good opportunity to jump into a buy trade on gold. Okay, so similar to what we had here. Okay, so similar to what we had at this price level. I'm just going to mark this out on the chart. So yeah, you see, so something similar to this resistance level before we had this breakout. So as you can see, after this massive breakout, you can see the bullish move to the upside. So I'm just going to wait for something similar, okay, before I go long on gold. Another reason is because we are approaching the all-time high on gold. So it's good to be cautious because we might tend to see some sort of bearish reversal before we get to the all-time highs. Okay, so this is the all-time high, right? So we are getting really close, so we have to be careful with our trade because price does not move in a straight line. So you don't expect price to just go up in a straight line like it's currently printing on charts. So from a price action, you can see we're just grinding slowly, chopping to the upside. So this is not a good scenario to go long, right? So lastly, on the 2 hours time frame, so something really quick to pay attention to is that we can see some sort of bearish divergence. Okay, so remember, a divergence is simply a scenario whereby the price movement goes in the opposite direction of a momentum indicator. In this case, we are making use of the RSI. So you can see, if you take these highs here, so from these highs to these highs, you can see price seems to be showing some sign of strength, right? Taking higher, making higher highs. But if you look at the indicator, you can see price made a lower high, right? And the first high was clearly overbought, and the second high close to the overbought level. So this is a bearish divergence, something to pay attention to. So even though we have a divergence, doesn't mean price is going to just come down. So we might get a pop up. So we might see something like this, maybe price go up a little, then dump. So this would even make the divergence more solid, okay, to make it stronger. Yeah, that's the word. So it's going to make the divergence even stronger. So this is what I'm watching out of gold. I'm not going to be going short or long right now because clearly the chart isn't giving us any signs of a good entry. Okay, I'm going to put it like that. So there's no clear chance of an entry, so I'm not just going to go long. I'm not going to jump into a chart to go long. So that's it real quick for gold. Next, we're going to talk about EUR-USD. So real quick, EUR-USD making some really nice movement. So clearly this is a bullish trend, right? So bullish momentum on EUR-USD. But this chart looks so absurd. The reason is because there are no clear signs of higher highs and higher lows. I know you might think, okay, this is a 4-hour chart. You might think, okay, it's bullish and all that. But for you to get great trade opportunities when following trends, you need to see clearly defined higher highs and higher lows, or lower highs and lower lows for a bearish trend. So looking at this past price action, right, you can see this is a bearish trend, and you can clearly determine this trend by looking at the lows and highs. So you can see a high, lower high, lower high, lower high, clearly defined lower highs and clearly defined lower lows. And within this market structure, you can see significant area of values, okay, support level, price rejection and all that. But if you take a look at this price level, you can only see, or you can only deduce that this is a significant bullish move, but you can't quite pick suitable entries because there is no clear market structure. Okay, the market structure is not printing out good highs and lows. I'm going to put it like that. But at this price level, you can see we had a low, a higher low, another higher low. You can see we had a high, a higher high, another high. But from this price level all the way to the current price, it has just been messy. But right now, something I can see on chart is an ascending triangle, which is a bullish continuation chart pattern. So this is what I'm going to be basing my entry on for EUR-USD, since I would like to take advantage of this bullish momentum. Okay, so going down to the 1 hour time frame, you can clearly see that this is an ascending triangle, right? So price making series of higher lows and getting rejected at a resistance level. So this is an ascending triangle. So I'm simply going to wait for price to break through like this. So I'm simply going to wait for price to break through this resistance level, make a retest, and before we head higher. So this will be my scenario to go long on EUR-USD. Other than this, I'm just going to stay away from the market, right? So we might not get a retest, but in this case, I'm going to wait for a retest and a bullish reversal from that retest, because looking at what EUR-USD has done in the past at this price level, it was messy, and if you just jump into trades like that, you might end up losing a lot of money. So that's why I'm going to wait for all the possible confirmations I can get before going long after we break through this area of resistance. And my stop loss is going to be just below this trend line. Okay, so it depends on the level where the breakout occurs. So we might see something like this. So we might get a slight consolidation. So we might not just break out immediately. We might get some reversal, consolidation down, and maybe break at this level. So if we do get a breakout at this level, then I'm going to set my stop loss below this trend line, which would signify an invalidation in the breakout of this resistance level. So this is what I'm going to watch out for to trade EUR-USD. Okay, I'm not going to go short, and I'm not going to look out for something else, because right now on the RSI there's clearly no divergence. Okay, so there's no divergence on the RSI. And if you go to the 2 hours time frame, so moving on to the 2 hours time frame, you can clearly see that price is at the the range between 50 to 80. which means the bulls are in control. Okay, if you go up to the 4 hours chart, so let's see, even on the 4 hours chart, you can see the bulls are in control. So there's sign of bullish strength on the RSI, which also signifies that a breakout from this ascending triangle might be a good trade opportunity. So this is what I'm going to be watching out for to go long on EUR-USD. Moving on, GBP-USD. Okay, so looking at this chart, this is a 4 hours chart on GBP-USD. It seems like we are getting a double top, but it is not ideal to just assume that this is going to be a double top until it actually happens. So right now, for me to go long, I'm going to go down to the 2 hours time frame. So in order to go long on GBP-USD, this is what I'm going to be watching out for. Okay, so I'm going to wait for a good consolidation. So something like this, a good consolidation with multiple retests at this resistance level, and then a breakout. So this would be my scenario to go long on GBP-USD. So other than this, I'm not just going to go long if we should just get a breakout immediately. So I'm going to wait for a good consolidation around the resistance level, showing signs of bullish momentum or incoming bullish momentum, then a good breakout with a good candle close above this level for me to go long on GBP-USD. Then I'm going to ride my positions higher. Okay, I'm going to trail my stops. So something else to pay attention to is that even if you feel this is a bullish trend, okay, so this is a 4 hours chart right now. So even if you feel, okay, this is a bullish trend on GBP-USD, I can equally, tell you that at this price level, this has been kind of like in a range, because you can see we had price, building bullish momentum up all the way to this level. We had a slight decline, a consolidation, and now we're back to these highs. So if you just picture your charts, okay, just give me a minute, I'm going to draw this with a triangle. So if you take a look at your chart like this, it almost feels like we've been in a range. All we have to see right now is price maybe reversing from these highs back to these lows, and you get a perfect range. So right from this price level all the way to current price, I can tell you that this has been in a range with no clear direction, right? But if you take a look at the lows, so let's say you pick the price movement from these lows all the way to these highs, then you can clearly see that this was a bullish move, right? So right now we're done with this bullish move and we are within this range. So if we get a break of this resistance level, that means the bullish momentum from this price action here is leading us higher. So that would be our scenario to go long. So right now, this is my scenario to go long, right? Waiting for a consolidation at this resistance level and getting a breakout. While for a short position, which might equally mean that this would be a double top, sending price downward, is that I'm going to wait for a good reversal candlestick at this price level. It might be a bearish engulfing candle. It might be a a doji or any sign of bearish reversal candlestick patterns. Then I'm going to wait for a break of this trend, right? I'm going to go down to the 1 hour time frame so we can clearly see this. So a break of this trend. So remember, we're going to wait for a bearish reversal candlestick. Then we're going to wait for this a break of this bearish trend, followed by a break of these lows. Okay, so this low. So if we get a bearish reversal candlestick, we break this trend and take out these lows, then I'm going to consider going short at a very low risk, targeting this area of value. So this would be a good opportunity for me to go short on GBP-USD. Meanwhile, for a long position, I'm just going to wait for a consolidation and a break of this resistance level for me to go long on GBP-USD. So that was it briefly. Moving on, USD-JPY. So USD-JPY is something we talked about last week. You can see the price action shows us that we've had series of bearish continuation pattern, right? Or bearish flags. So you can see we had a good breakout, a consolidation in form of a bearish flag, a breakout sending us downwards. We had a reversal to retest this area of value. We had a consolidation and a breakout. Now, same thing seems to be happening. So something very important to help you understand when it comes to trading breakout is that whenever you are going to trade breakout, you should watch out for the leading price movement that leads to that breakout. Okay, so I'm going to give you a very cool example right now. So let me block out these price levels, because I know so many persons would have fell for this trap, right? So now let's say we have, price like this making two lows, so a low and a higher low. Okay, so thinking this is similar to what we had here, and you want to go for a short position. What you can see right now is that we had a sharp bearish price decline all the way to this level. So there's a good chance the rate at which price fell down to this level, there's a good chance we might get a reversal. So what you do when you get breakouts like this, or when you intend to trade bearish continuation pattern or bearish flags, is that you wait for a consolidation at the trend line before the breakout, or you wait for the breakout, a consolidation before jumping into the trade. So I'm going to show you what I mean right now. So you can see the consolidation at this price level, okay, giving us the bearish flag, wasn't a sharp movement. Okay, it was a gradual consolidation, a gradual grind to the area of value. And even before we had the bearish breakouts, we had a small consolidation on the trend line before we had the good breakouts to go short. Same thing happened here. Okay, so you can see we had a very fast bearish decline, and we had a consolidation on the trend line before the breakout. And you can see the difference between these two, or the similarities between these two breakouts, is that when the breakout finally happened, it gave us a very good solid bearish move. When it happened here, it gave us another solid bearish move. But you can't jump into a breakout like this and expect to get the same results as you did here. The reason is because the rate at which price moved to the trend line for the breakout shows us that something unnatural is moving the market, right? So this wasn't a natural movement. This wasn't a movement prepared by natural causes that will lead to a price going lower, right? So that's why when you get breakout like this or heavy movement like this, even after the breakout, you wait for consolidations to give you that confirmation that the market is at peace, and whatever is going to happen in the market next would actually be as a result of the natural decisions made by traders in the market. So this might just be caused by news effects or manipulations in the market. So if you should jump into a trade like this, there's a good chance we get a reversal. So that's just something I feel you need to know, because so many traders make this mistake. So if you're interested in learning stuff like this, learning how to properly trade breakouts, check out our course on Udemy. Okay, there's a link in the description. Check out our course, enroll and learn. Okay, because you can't be a master at trading if you stop learning. So it's a continuous process. Even myself, I learn every day. Okay, I build my trading skill, I add to my wealth of knowledge. So you should do the same. If you are interested in trading breakouts, trading market structure, understanding price action, then this course is for you. Okay, click the link in the description below to enroll and join our Discord group. You can get yourself engaged with chats and communicate with other members of the community, ask questions, and get yourself well prepared for this coming week. Okay, so right now we can see similar consolidation. So at this price level, if we should get a sharp movement down to this level, we are not just going to jump into a trade until at least we get a consolidation, okay, before a good breakout. Then we can jump into that trade for a short position, right? Because something similar has happened in the past. So that's it briefly for USD-JPY. Lastly, I'm going to talk a little about Bitcoin. Okay, this is something we talked about last week. A falling wedge with a very good bullish divergence, okay, on the daily time frame. So I talked about this last week. So if you take a look at the lows on the price, we have price making lower lows. On the RSI, we have price making higher lows. So this is clearly a bullish divergence on the daily time frame and corresponding to a falling wedge. So we had a good breakout, a consolidation at this resistance level, which I talked about last week, and now we had another breakout. So we are currently at another resistance level for those trading Bitcoin. So this is the 1 hour chart. Just going to zoom in real quick. So 1 hour chart currently at a resistance level. So let me see if we can find this resistance level right now. So yeah, so I'm going to mark out this resistance level. So this is it, right? So right now we're currently trading above this resistance level or around this resistance level. So what I'm going to watch out for is waiting for a good consolidation, okay, a good consolidation, and then a bullish breakout for us to go long. So this would be my scenario to go long on Bitcoin, taking advantage of this bullish momentum. But something to pay attention to is that on a daily time frame, we are extremely overbought. Okay, so we are extremely overbought on the daily time frame. So the reason why we wait for consolidations is that these consolidations might play a very important role in cooling down the price or bringing down the price back into the safe zone before we go long. But we could remain the overbought level and price will keep going higher. Okay, but something very important to understand is that whenever we get price extremely overbought, there's a good chance we might see some sort of bearish reversal to cool the price down before heading higher. So this is my outlook for Bitcoin. I won't be shorting Bitcoin right now because it looks really bullish. So all you have to do is wait for that bearish consolidation and then a bullish breakout for you to go long if you day trade Bitcoin. So that's it from me this week, guys. Once again, check out the links in the description below, and you can use the timestamp to navigate to whatever currency pair you wish to watch me analyze. So that's it briefly. Check out our social media platform, Instagram. We newly launched our Discord channel and a chat room. Join us on Discord. We have all the links in the description below, and get involved with trading. Okay, get involved with all the action. And lastly, like the video, subscribe, leave your comment if you love the content, share with friends. That's it, guys. See you next week.